All right. Well, we might have a few more kind of slowly trickle in this morning, but we'll go ahead and kick off to make best use of everyone's time. So first of all, welcome. My name is Jen Bianco, and I'm a senior manager in Deloitte's Global Employer Services Group and the co-chair of educational programming for the Women's Energy Network of Houston. I'll be your host for today's panel discussion, and I'll also have the honor of introducing, which I will go through these ladies' beautiful backgrounds here in just a second. But first, before we dive in, on behalf of our WIN leadership team, we're pleased that you're all able to join us today for our webinar. These driven and talented women you see on the screen make up our WIN Houston board. So they lead the teams and the programs that make WIN the powerhouse organization that it is today. And as you may know, WIN is not a not-for-profit organization. So we couldn't exist without the support of our sponsors, as well as those willing to volunteer their time. So thank you to all of the volunteers for keeping this organization thriving over the years. And a big thank you to our national sponsors and partners. For those of you who might be new to WIN, WIN is an international organization with 20 chapters across the US and Mexico. We're opening up new chapters in the US and we'll be launching a chapter in Canada soon. We have over 6,000 members, and of 6,000 of those members, 2,000 are here in Houston. So our mission is to develop unique programming that provides networking opportunities and fosters career and leadership development to women who work in the energy value chain. So now we're going to just dive right in. To capitalize on these networking opportunities, we're going to have a quick session in the breakout before like I said, introduce our panelists today. Before we do that breakout is intended to get you to have a little bit of networking time like we would have had in your more in-person events. You'll have about 10 minutes or so to discuss basically this polling question, which we're going to kick off with, just to try and gauge where everyone is in terms of their understanding and involvement with PE. So I'll just let you guys go ahead and answer those questions. See some good responses coming through. So the majority of the folks here, it looks like it's, I know what it is, but I've never directly worked in it. So great, you've got an idea, and I think our panelists will have some really good information for you today. So like I said, I think we're going to jump into our first networking session. We likely will not have time to do a networking session towards the end, as we want to give time for the panelists to answer some questions that we have prepared, but also any questions that you might have. So we'll use this networking time just to make a few new connections and kind of get ready for our discussion. So let's go ahead and jump into those rooms.
employees or to their pensions. And so, you know, a lot of funds will take that investor money and then look to deploy them, provide capital to businesses in hopes of generating that return. And so that's, you know, I'd say that's really kind of, you know, the structure of private equity and then how private equity helps build businesses and deploy capital.
Great, thank you. Is there anybody else on the panel that wanted to add any further comments on that point before we jump to our next question?
That was a really good answer.
You covered it.
All
Yeah.
right. Awesome. Okay, then we'll move on. Jamie, so can you provide an overview of PE from a portfolio company perspective and share about what an entrepreneur looking for funding might look for in a partner?
Yeah, so I think Justine covered it pretty well from a private equity perspective, but from a management or an entrepreneur perspective, private equity is somebody that can come in and they give you dollars in exchange for equity in your business. And so it's around arriving to what that value of your business is and how much their dollars are really worth coming into your business. And so I feel like that's a lot of the trouble on the beginning of things, is both coming to a general idea of valuation. A management team might think they're worth a lot more than they really are, or, you know, the private equity thinks they're worth a lot less. So coming together and being able to put a term sheet together that leaves both the management team and the entrepreneur empowered and excited to continue to run the business. And I think also leaves the private equity partner in a place that says, wow, we've got a great team here. We made a good deal and we both get to grow together, and we get to do well by our investors in our private equity firm, and, you know, get to come together on our quarterly meetings and say what a great investment we made. So I think the hard part, if we're not answering that, is coming together on the onset. And then you ask yourself, how do you come together? And I was talking to these women before, you know, there's a lot of private equity firms out there. And from my perspective as an entrepreneur, sometimes that might seem a little intimidating. And I think the less intimidating you make it, and the more networking you do, and the more you get to know about different private equity firms and who the individuals are really working within that firm or company is really important. And on my journey, when looking for a private equity partner in my business out in West Texas, I wanted to find someone that was able to provide capital and trust me as a manager and had deep industry expertise in oil and gas. I think that really finding somebody with that sector experience is important, because you can put something in an Excel model and think that you're going to hit it out of the park, but things happen. COVID happens. Oil goes to 20. You know, things happen that blow up your model, and you're going to have to sit down and get real with your investor partners. And so I think it's important to find a group that has been through those experiences, that won't leave you high and dry or try to buy into more of your business when you're down and out. I think that's really important. And so I don't know if I'm expressing that well enough, but to really find a partner that can serve as your mentor, and you know that they have a track record of working with management teams in good and bad situations. And also, you know, I think it's really important as an entrepreneur who's looking to run a business to make sure there's good alignment between you and the private equity firm. You know, how do you want to grow? When do you think about an exit? How do you think about exits? What is your day-to-day involvement going to be like? Are you a private equity group that touches base with me on a monthly or a quarterly meeting, or am I going to be answering to you on a daily basis? How hands-on or how hands-off is the company, or is the private equity group? I think that's really important to understand. And I think that the best way to understand that is, again, getting to know people in the space. Deviani's on the call, and she and I work together. She's at the private equity group and I'm at the operating company. And we didn't know each other off the bat, but we've worked on building a relationship and building trust and transparency with one another. So I think that's really important when looking for a private equity partner, to not only feel like you're getting a good, healthy capital source, but someone that can be your ally and hopefully form great professional relationships with along the journey. So that's my answer.
Very good, thank you. So now we will go ahead and jump into a question for Deb and Gori. Let's start with Deb. How do the fund and portfolios companies work together on a day-to-day basis? And then we'll go to Gori after that.
Well, I'd echo a lot of what Jamie said. As she said, we work together, and I think it's a great term thinking about, the private equity firm and the portfolio company as allies. The best investments are where the incentives are aligned between, us and the management team. And you have to think about them as your partner, and you've got to trust the management team. So, for example, my role is not the day-to-day operations of the sand mine that Jamie runs. She knows how to do that far better than I do, and I've got to trust that she can do that. My role is really much more high level from a board point of view, strategic. So thinking about capital allocation, how we make new investments, how do we balance reinvesting in the business with potentially strategic M&A, where are interesting growth areas going to come from. Some of the other firms we're working with, portfolio companies that we have, I'm looking at, are there interesting growth opportunities in energy transition? So it's much more strategic, and it depends depending on sort of the firm. Some management teams I'll speak to once a week, some will be once a month, but you really have to think about them as a partner, and you're trying to build and grow this company together, and then ultimately exit for a good return. And that's how I think how we view it in our firm.
I think from my experience with H2O Midstream, we've on a day-to-day basis may have multiple channels and multiple people at different levels that are in touch with folks at EIV. There's a VP and an associate that kind of cover our company. And so when we're working through a deal proposal, or we're talking about, credit related issues with our bank, or thinking through things where we're going to need board approval, we're working with them pretty closely to make sure that we are thinking through risks, thinking through questions that the board may have, and kind of getting in front of it and in front of those and answering those, and preparing the right materials so that we can make the right decisions for the business. So there's very much a relationship that's developed over the last 3-4 years with this group of people. I think at this point they can probably anticipate my answers, and I can probably anticipate their questions pretty well. But I mean, I think broadly speaking, I've come to view EIV as a resource. I've come to view, the perspective they bring, which to Devyani's point can be very strategic and high level, and kind of it sometimes broadens the conversation from the day-to-day business that we're trying to run. And so we view them as a resource, and we work with them as a resource. I think Justine, for example, interfaces with our operations and engineering group, because part of her role is to help maximize, making sure our operations are streamlined. And there's been times when, they've provided specific project support, or we could call them and say, hey, how are other portfolio companies handling this? Can you provide some perspective or some context, and get some learnings from them? So, I mean, we feel very much that the relationship on a day-to-day basis needs to be that of a partner, and of a resource to help grow the business. I don't think there's, nobody likes being micromanaged, and I don't think that, there's kind of a good balance to try to achieve open communication, so there's good transparency about the business, and knowing where things are headed, and still making sure the management team has the autonomy to run the business. So I definitely think that, that's a good balance, but that's been my experience of how we've been able to work together on a day-to-day basis.
Thank you. That's super helpful. Lots of relationship building I'm hearing throughout. Very good. So we've got one quick polling question before we lead into our next topic here. So maybe let's pop that up on the screen. This is going to be testing our knowledge, I know for me. What makes a good deal? Right. So I'll let you take a look at those answers and give us your opinions. Okay, questions, answers coming in here slowly. Give everyone another second. Okay, we're almost at 70%. So what I'm seeing is 59% investment returns, followed by management team laser focused on a specific business plan. Shortly thereafter, we're looking at macro market opportunity. So that's a great lead into our next question for Jesseline and Jamie. So what does a good deal look like from both sides? Jesseline, maybe we'll start with you.
Yeah, sure. Well, I think what you heard us all talk about earlier was alignment, right? And so, I think, again, a lot of this comes down to the partnership and recognizing that kind of throughout a business's life cycle, there are going to be things that happen that are entirely unexpected, right? There are going to be changes in environment, possibly changes in commercial markets. And so, again, putting that time in to develop the relationship and making sure that you're both aligned around the outcome, right? So clearly that outcome is an investment return. So I think, the group was correct in saying that, we're all here really to make a return, right? Whether it's, at the fund level for our investors, right? I know whether it's kind of Jamie and Gori for themselves and their management teams, right? At the end of the day, we want to build companies together that can generate the financial returns that we're looking for. But I think there are a lot of other traits, right? And we saw some of those in the poll that can lead to a successful outcome or can lead to a very challenging, I would say, process along the way. And so, I'd say alignment of both kind of economic, interests, but then also thought process, right? Is every discussion between the management team and the private equity firm going to be contentious? Are you going to have just completely different views of how to approach kind of every problem or every challenge that comes up? Or are you guys thinking about kind of the risk profile and where you want the business to go in a similar manner? I think, those are some of the things that, I think kind of collectively we'll all look at when we're evaluating deals, both from the fund perspective as well as from the portfolio company perspective. I thought the nobody kind of agreeing to the ESG or environmental attributes is interesting, given just the environment and how much kind of focus and attention there's been on ESG. So, I think there are certainly some, you've seen a lot of money flow into ESG-driven vehicles. But, again, I would say that really boils up to a fund strategy, right? So there are funds out there that focus on ESG types of investments. There are other funds where ESG attributes, or energy transition attributes may be one part of of many factors that are considered.
Yeah, and that's right. I think, so our question is, what does a good deal look like from both sides? And again, sitting here from a portfolio company, trust us to manage the business, trust us to make smart decisions, trust, knowing that your private equity partner generally has that point of view when going into a business, I think is really important. And I think it's also really important to make sure there's a structure in place that if the company does well, the management team does well. So it doesn't always feel like it's skin off the management team's back, and I think I'm talking to those women out there who are entrepreneurial, make sure when you're signing a document and you are entering into a new business that you feel like, yeah, wow, I'm empowered to hit it out of the park. And if I do well, everybody else will do well. And so maybe I'm getting into specifics, but I deal with this all the time. That's either a percentage of earnings. Just make sure that there's a carrot there for you that everybody recognizes. And I think that is what creates more alignment, because at the end of the day, so that, to me, that's what a good deal looks like, is leaving feeling empowered to run the business and that you are trusted to do so.
One thing I'll add on the good deal from our perspective is, like, on what Jamie was saying about that alignment between, in her earlier response about sort of price. And at the end of the day, buying a company, it's got to be a good company, a good management team, in a good sector, but also at the right price. So I feel like it's very much like buying a house. Is it an up and coming neighborhood? Okay, so it's worth a little bit more. Or is it, a very, very cheap neighborhood? Okay, well, you can get it sort of, for a really great price and sort of a discount. And that's, so, all of the answers on that poll, sort of thinking about the macro trends, what are the headwinds, the tailwinds, what is the management team, what's the product, what are they doing? And at the end of the day, are you buying it for the right price? And agreeing on that price, because that's what's going to give you your return. You could have the best company in the world, but if it's costs an absolute fortune, you might never actually be able to sell it for what you bought it for. So I think, in my view, and I'm going through buying a house right now, it's very, very similar to buying a house. Lots of similar kind of attributes.
Yeah. I think that's a good point, because it doesn't have to be that complicated. What's your value? And you both have to agree on that value and feel good about it as you start your relationship.
Right. So Gary, we've got a question for you. What does it take to get into PE, and what is attractive about working in this space?
Okay, I think that how I got into PE really was around an idea that our team had when we were kind of literally at a restaurant, kind of drawing some things on a napkin, thinking, okay, we see an opportunity in this market. We think that there's a lot of infrastructure need that we see coming because of development plans, commodity prices, completion techniques, et cetera. And we need a lot of money to go build a lot of infrastructure. And so, we weren't going to be able to finance that ourselves. We weren't going to be able to finance that under a venture capital model. And so we needed to go get money from a private equity company to go do that, which was literally an idea that didn't really have any assets, didn't have any revenues. But we felt that there was a market need, and the management team had the expertise to go and execute on this vision. And so I think kind of the first element for me was, okay, this is an idea that has merit. We think we can execute on this, and the right relationship to make this work is a PE relationship. And so that was kind of the first step. And so I was part of a founding team and went through an equity raise, talked to a number of companies, and kind of answering the second question in parallel of what was attractive to me about working in this space was it was a chance for me to take an entrepreneurial journey with a team that I was enjoying working with and had deep relationships with going back many years, and a market and a business plan that we really believed in. And so, there was an element of being able to take an idea and build a company that was really appealing, and finding partner that would support that was a really empowering, to what Jamie said earlier. From a personal perspective, I think there's a level of risk tolerance here that does come into play. The compensation is back end weighted. It's goes to exactly to what Justine and Devyani are saying, is that there's, alignment that needs to happen between the company, where if the company succeeds, you succeed. And so, there was, you have to kind of be willingness to take a risk and by virtue of that, be able to participate in the upside, but you may, have a compensation structure that's more back-end weighted versus an upfront salary if you just went, try to get a job, what you might be able to get on the market. So there's definitely that element. And then kind of the last thing I'll say is just from a skill set and a network perspective, I've kind of noticed that there's two, there's, lots of people it takes to build a company, but most private equity companies and most teams are very lean, right? You're trying to run a very lean operation, and you don't have a ton of overhead. You don't have, a super large bureaucracy. That's not the goal here. The goal is to build a really great company and to do it as leanly as possible. And so I think having kind of a versatile skill set, where I've noticed entrepreneurs, you tend to wear many hats. You float between maybe working on a deal and structuring, but then at the same time, having the versatility to think through an operational or logistics issue or something that's more tactical, where in a larger organization, you might be kind of more siloed or have more time to focus. I've noticed that, in a smaller company and in a team that runs fairly lean, you tend to wear multiple hats and be willing to flex that way. And so I think that versatility and having that ability in your skill set has been really helpful for me. So I mean, I don't know if that completely hits all the marks, but from a portfolio company perspective and the journey we've had, I think these are the things that come to mind.
Yeah, and I think, you know, it's super helpful to hear each of your perspectives. They're all very different, but coming along the line with same themes. So I appreciate that. And I think now we can ask, we'll kind of just go around the rest of the panel. So Dev, can you explain how you got into PE, and then we'll just kind of go around after that?
Yeah, sure. So I worked at Exxon and then BCG, and I went to business school, and I joined private equity after business school. And I feel like every single job I did, I learned what I liked and what I didn't like. And I never sort of, you know, those jobs I didn't really enjoy, and it actually taught me sort of what to look for in my next role. And I think over time, I sort of figured out, okay, well, what is it that I really enjoy? And it aligned very well with private equity. So I love thinking about strategic stuff, macro trends, you know, what's happening in geopolitics, what's going to be the next big thing, in, you know, product, service, whatever. But I also liked the analytical element of it, the financial modeling. And I don't mean financial modeling just for financial modeling's sake. It's really thinking about the implications of different capital decisions and, you know, capital allocation decisions that you make. And I also found that I loved working with really intellectually curious people. And I think that's one of the key things in private equity is you have to be intellectually curious. You have to constantly be thinking about what's a good investment, what's not a good investment. Is there an opportunity here, you know, in this space? If something goes wrong, how do you get out of it? And so the way I got into this from business school was I just started networking. I started speaking to people. I started understanding what private equity was. And I would say the very large private equity firms, KKRs, the Blackstones, you probably need to have sort of a tick box on your resume that you've worked in investment banking. That's kind of probably a given for a lot of them. But in Houston, the great thing about Houston, and I'm assuming a lot of our attendees are from Houston, is the private equity firms here are much more sort of growth equity. They hire people from non-strategic backgrounds. They're looking for people who've worked in energy, either, you know, for an oil and gas company, a big services company, a consulting firm, an accounting firm. They like people who worked in the industry to come in and sort of use that knowledge and that industry expertise. So the big thing is really building that network and meeting people. And I would say, you know, Jamie and I were talking about this before. This is a network for women. There's not a lot of women in energy private equity. There really isn't. And so that's an asset because you get to know more people more easily. So, you know, pound the pavement, make those contacts, build that network would be my number one piece of advice if you were interested in private equity.
Yeah, Jamie, maybe you could go next.
You know, so what's the question? How you got into private equity? Well, I went to business school and I worked in private equity and investment banking after school, but I come from a very entrepreneurial family. And so that's when I started my first business within their world. Our first sand plant. They're in mining. So basically I should explain, am I passionate about mining? Not really, but I shouldn't say that, sorry, but I'm passionate about starting new businesses. And so I have a family that is, my father and uncle set out 50 some odd years ago to start a new business every year. And they did that in the mining and aggregates space. And I wanted nothing to do with it. I wanted to go to business school and I wanted to work in investment banking and I wanted to move to New York City, and I did all of that. And then I got there and I'm like, but that's pretty cool what they're doing, regardless of the space, all those things Deviani touched on, how to make investment decisions to create returns, to employ people, to create a happy workplace, to sustain a family, a community. That all was really appealing to me. So with under their realm, I learned a little bit about fracking, and I said, let me leverage some of your expertise and start a new business, a sand business totally aligned with oil and gas. And so I got that experience and I proved up and built a business, and there are other opportunities to grow that might have at the time been a stretch outside the capital risk profile that my family wanted to take all in its own right. And so I'm glad that I had a little bit of experience working with private equity to sort of convince my family to feel safe and making a connection and building a partnership that both my family and myself could take risk and building a company, but having a good partner come alongside us. So we weren't, taking all of the risk. And so that's sort of my story into private equity. And like Devyani said there, it's been a great experience for me so far, because I do learn so much within the world of my family business, but then I also learn a lot through the professionalization of an actual private equity firm that, has sort of different capital considerations than maybe a family business would. And so I sort of report now into both of these entities, and it's been a wonderful experience. So that's how I got into it.
Jesslyn, maybe you could share yours as well.
Yeah, sure. So I think my path actually followed Devyani's similarly in that, so I worked for GE Power for a number of years and cycled through different functional areas. So started in kind of large capital project management, did some manufacturing operations management, kind of commercial and business development, as well as project finance. And I realized I enjoyed aspects of really every one of those functional groups, and realized I really wanted a role where I could bring all of those skill sets and experiences to bear, and saw that, again, from networking, from speaking to people, speaking to friends who had worked in private equity, and on the investment side, realized that there was kind of, if you joined a private equity firm, you could exercise all those skill sets at the same time. And so I think the way I got in was really through networking, right? It's relationship building. It's, understanding what types of firms, and like Devyani said, I think a lot of the Houston-based firms are much, they recognize the value of bringing in talent who's worked in operating roles or has worked in operating businesses, and they see that skill set and experience can really serve their portfolio companies. So I've, worked closely with Gori at different periods, kind of as her business has faced, challenges and opportunities, because, there are challenges that come with growth, right? So let's say, if you've gone from a 4-person company to a 50-person company, there's structure and process and systems in there that get stressed through growth. So I think what I found exciting was really being able to partner with those entrepreneurs and bring the skills that I had built to all of our portfolio companies. And I think, the point about intellectual curiosity is something, again, that really excites me about coming to work every day, because we look at, the energy industry is changing rapidly, right? You're seeing new forms of energy. You're seeing new ways that energy is being delivered. And we, it's part of my job to understand that, right, and stay on top of that and understand where that change could create opportunities for us to invest.
Thank you, guys. All really interesting paths to get to where you are today. Before we kind of go into another poll or switch gears in the questions a bit, I just want to pause and make sure if there's any questions on the phone related to kind of what we've just talked about in terms of their journeys to get to where they are today. Please feel free to put it in the chat or start with a chat and we can bring you off mute. Just wanted to give everyone a chance to do that if there are any burning questions. All right. And again, if you pop one in there afterwards, I'll be able to see it here in a second. But let's go ahead to our third polling question here. Like I said, switching gears a little bit. Jesslyn brought this up a little bit earlier. So do you think there is a future where ESG and fossil fuels can coexist? A little bit of a curveball from what we've been talking about. Let's see what we've got. Okay. Questions coming in. I think we've probably got a good pool of answers here. People seem to be excited to answer this question. So across the board here, looking at 40% of 50-50 split. Then we had 30% at mix, but more ESG. And then the other one on the other side at 24%. So this will be an interesting few questions we've got coming up here. All right, so we'll start with Deb. How has PE responded to a changing investor sentiment and the increased appetite for ESG?
Yeah, it's interesting seeing the response to that poll, and it is kind of mixed. And I'd say that's sort of where a lot of private equity firms are, a lot of LPs are, is like, and it's impossible to answer what is the future going to look like. I think, betting against energy transition is betting against human ingenuity, and I think that's a losing proposition. But that being said, there's a lot of new sort of technology developments and cost reduction developments happening in traditional oil and gas. So there's that human ingenuity element everywhere. I think, at SCF, our view is that the increased focus on climate change will accelerate the energy transition sort of agenda, but it will take time. And it's going to take decades, not years. And traditional fossil fuels, oil and gas and LNG will be a very big part of that story for a period of time. But that being said, energy transition is a big part of our portfolio. We recognize that it's coming. I think there is a moral imperative to recognize and do something about climate change, but there's also a moral imperative to provide cheap energy to the world. So to allow a lot of people in the world to have access to cheap energy, to grow, to develop, to rise up into the middle class. So finding opportunities in both of those spaces is key. And as a private equity firm, if you think about your investments in the spectrum, on the one hand, you have traditional oilfield services or oil and gas, E&P exploration. On the other side, you might have hydrogen, green hydrogen. And there's everything in between, from infrastructure to midstream, downstream, LNG, everything. And it's decarbonization, methane reduction. So I think private equity firms, especially energy-based private equity firms, are thinking about how to find opportunities in all of those spaces. And some are moving faster to one end of the extreme than others. But I think everyone is recognizing that we need to do something. We need to look somewhere in that spectrum. And then the kind of second main point is it fundamentally comes down to returns. And it's just being said, a lot of our investors, our limited partners, are pension funds, and they, at the end of the day, have to make a return to provide the pensions for the people, their stakeholders. So if you make good returns in oil and gas, that's great. If you make good returns in energy transition, that's great. And the problem recently is that oil and gas has been so volatile, and the risk-adjusted returns just haven't been there. There's been so downturn after downturn, and a lot of sort of the returns in oil and gas just haven't delivered. And so there's been a big push to renewables because it's more stable. It's a much more stable revenue stream, much more stable return profile. So the private equity funds that are staying in oil and gas and continuing to build investments in traditional oil and gas and fossil fuels are having to basically manage that investor sort of question of, okay, well, are you going to manage through? Is there going to be another downturn? Are you going to deliver the returns I need? So at the end of the day, I think you have to manage all along that spectrum, and you have to deliver returns regardless of where you stay in that spectrum. And I think SCF's view is it's coming and we're addressing it, and we're going to continue to address it.
Okay. So along similar lines, for Jesslyn and Gori, can you comment on what your firms are doing specifically around ESG? Maybe Gori, we'll start with you.
Yeah, absolutely. Actually, one of the original premises for the company was that by putting permanent infrastructure and pipelines in place, we were taking trucks off the road. So we had a environmental tinge to the business focus of what we were trying to accomplish in very early days. And so to the extent that you're reducing emissions associated with trucking water all across the basin, there's definitely a benefit there. In more, and I'll say in those early days of kind of taking trucks off the road, that transition and moving to a midstream model in our particular space, which is around produced water management and in unconventional shale plays, that transition happened, really rapidly. And I think the next area of focus and what we've seen happen across the midstream, across the water midstream space, is a fairly big emphasis on reuse and redelivery of that water. So avoiding using, fresh or brackish sources, and really working to put treatment technology, storage, and the infrastructure assets in place to allow our producers to be able to reuse that water. So there's definitely a element there of trying to be better stewards and of our neighborhoods and of our environment. I think from my perspective, and we've seen this trend now start to play, is that some of these metrics are now being tied to capital. I mean, I've seen a couple of sustainability linked bonds that different companies have been able to issue, and it's really based around environmental metrics and also operational metrics tied to some of these things like recycling. So what we're trying to do is, number one, make sure from a business perspective, we're operating safely, we're operating in a way that like respects the long-term needs of our stakeholders, of our landowners, and of our operators, and then also to try to find new ways to use the water to eliminate and mitigate the stress on the environment in a way that still allows our operators to continue to operate. So I mean, that's a very kind of market specific and tactical answer for our business, but those are some of the trends that we're seeing and what we're trying to focus on.
Thank you. And Jesslyn, what about you?
Yeah, well, I think, Gori touched on a good point, which is, stewardship. So I don't, we invest in energy companies, but I think, every company really wants to be a good steward of the environment and minimize their impact, right, on the minimize any negative impact on the surrounding communities. And I think, in general, energy businesses have generally been responsible, right? They take, there's a lot of focus on health and safety. There's focus on environmental footprint, and so I think, part of addressing ESG concerns is also communicating what is already being done, right, and how important it is to these companies to operate as responsible stakeholders in their environment. At the same time, I think, Devyani made a good point about, the volatility that has been there in kind of traditional energy, coupled with obviously increasing concerns around global warming has I'd say changed the conversation around ESG. And we see a lot more focus on emissions and kind of the environmental aspects and trying to understand really what is the kind of environmental footprint of a business, that you own or that you operate. And I think what investors are looking for is more transparency, right? So I think, you're going to see increasingly kind of calls for more transparency, more actual kind of verification and monitoring of emissions. And, you're starting to see that come out from the public sector. So you're seeing, obviously we've all seen the announcements from various companies, committing to net zero and putting metrics out there on methane releases and greenhouse gas and, carbon, companies buying carbon offsets. So I feel like that is something that is going to trickle down into kind of private equity and private companies. I think we also have to be mindful that as Gori mentioned, these private companies don't have the same resources, right? You don't have an entire kind of environmental department that can respond to ESG, queries or concerns. So trying to make sure you're being responsible, but in a way that is also manageable, for an entity of its size and doesn't, I think one risk is you don't want to outregulate kind of all of the small companies that make the energy industry kind of as vibrant as it is. And so I think that's a balancing act, right? I think we all want to be responsible, but we want to do so in a way that is meaningful, and kind of at the right level for that company. I think the only other thing that I would say about ESG is that you only have to look at kind of the SPACs and, what's going on in the public markets to see, I'd say, kind of the investor enthusiasm around energy transition. And, I know Devyani talked, about buying assets at the right price, right? So I think, something that, us and probably every fund out there is thinking of is what is the right price, right? If you have a lot of kind of, money that's looking at energy transition types of investments and you're starting to see the prices bid up, again, do you think you're buying in for the right price? Do you think kind of the fundamentals of that business support the price that you're buying it for? And then, we're all trying to make a return on the back end and exit the business for more than we bought it for. So it's understanding whether you have line of sight to that. And I think, I think the focus on ESG has certainly changed, how you'd approach the market over the last year.
All right. So any other comments on the ESG space before we kind of open it up for questions from our panelists? Any other comments? Okay. All right. Well, now I do want to ask the group if there are any questions to. I think you can actually come off mute. There's not the smaller group, so it should be okay to just come off mute if you have a question, or if you're more comfortable putting it into the chat, I can ask it for you. Any questions? Any other comments from the panelists and things to kind of bring up that we didn't touch on today? All right. Well, if there are any questions, I'll just keep watching the chat, but otherwise we'll just kind of move on to our upcoming events. I mean, first I want to and foremost want to really thank our panelists today. You guys have been given a wealth of information and really, I think, opened my eyes to a lot of things I wasn't aware of in this space. I'm sure the group feels the same. So thank you so much for your time. It's very valuable. So thank you. Before we wrap up today's session, though, I'd like to share a few of those upcoming events and keep everyone kind of aware of what's coming down the pike here. So we have a few virtual luncheons coming up, but you'll also notice that we might be introducing in-person events based on what we might hear from you guys. So we've recently deployed a survey to understand where our members' heads at in terms of coming back in person, and we're trying to be sensitive to everyone's needs and opinions there. So we'll be kind of coming out to see if that will be coming in the summertime. So stay tuned on that, but you can see our list of speakers in the next month or two on the screen here. The last thing here is we've got some recommendations from our panelists, some great ideas in terms of networking, different podcasts and books that they've enjoyed. So we'll be sending that out after this session as well for you all to take a look at. And just please remember to update your WIN profile with any new information so you can continue to receive important news and reminders. Being connected is important here, obviously, and we also would love for you to be able to connect with us on LinkedIn. So please remember to do that. So that brings us to our close. I'll just check and make sure no more comments or questions from the team before we close. Okay. All right. Well, thank you all so much for your time today. I hope you enjoyed it and found it valuable. I know I did. And thank you so much to our panelists again. I hope everyone has a great rest of their week. All right. Thank you.
Thanks so much. Thank you.
Thank you, everybody.
Thanks.